Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Northland Power stock so we can determine if it's a buy or a sell. Northland Power develops, builds, owns, and operates clean and green power infrastructure assets in Asia, Europe, Latin America, and North America. The company produces electricity from clean burning natural gas and renewable resources such as wind and solar. The company is headquartered in Toronto, Ontario, Canada, and was founded in 1987. Let's get started with the model. This is a mid-cap company, 8.6 billion market cap. They're trading at $34 a share, and they have 251 million shares outstanding. We'll look at the ticker that trades on the TSX, so all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow grows a lot from 460 million to 1.3 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. That more than doubles from 450 million to 950 million. Revenue is the sales for the company, and that grows each year from 1.7 billion to 2.4 billion. Let's look at the capital structure. 4.4 billion of equity, 7.2 billion of debt. They're 38% equity, 62% debt. Their net debt is 5.9 billion. And I gave them a WACC of 10.8%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year for, that's 13.8 billion. We discounted those numbers back to today's new weighted average cost of capital. We get a value of the company of $12.6 billion. We divide that by 251 million shares. And we get a calculated stock price of $50. They're trading at $34, so they're trading at a 32% discount. It's a buy according to the model. Simply Wall Street values the company at $38. They're saying it's 10% undervalued. 16 analysts price this stock and the average price target is 45. They're saying it's 31% undervalued. This is where the stock has been trading since 2004. It took until 2016 to break through $20. And then it took another 4 years to double from there. It went up to $40 in the beginning of 2020. It broke through $50 in the beginning of 2021, but it's come down a lot since that top. It's down about 35% since the beginning of 2021, so it could be a good time to pick up the stock. They pay a monthly dividend, and it's been 10 cents consistently for a few years now. It's a pretty small yield, about 1.2%, 8% of their free cash flow, 11% of their net income. There are 21 companies in the same industry as Northland. The average dividend yield is 1.6%, the median is 3.9%, they're at 1.2%, so they're below both. When I convert all the market caps to Canadian dollars, they rank third. Constellation Energy is first at 34 billion Canadian dollars, but this trades in the US. Their price to book is worse than average. They have a really good PE, a lot better than average. Their price to free cash flow is a little better than average. And their price to sales is worse than the median, but a lot better than the average. So to summarize, I have them trading at a 32% discount. I rank their free cash flows and revenue 7 out of 10, and their ratio is 8 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.